Welcome to The Explainer, where we break down what's really moving the markets. And today, wow, what a split personality we saw. On one hand, you had this incredible AI boom just sending tech stocks into the stratosphere. But on the other, the rest of the economy looks like it's grinding to a halt. We're going to untangle this tale of two markets. So, let's get right into the trading day for Monday, November 3rd, 2025. You know, it was just one of those days with a totally split personality. You had this explosive growth in artificial intelligence, giving a massive boost to a few chosen companies, while it felt like pretty much everyone else was fighting against a really tough economic headwind. Okay, so at first glance, these numbers are, well, they're all over the place, right? The Nasdaq, which is full of tech stocks, and the S&P 500 both squeaked out a win. But then you look at the Dow Jones, down almost 0.5%, a drop of 195 points. That right there tells you the whole story. Something huge was propping up a select group of stocks while most others were really struggling. So here's how we're going to break this all down for you. We'll kick things off with the big picture, this idea of a divided market. Then we'll dive into the AI engine that's behind all the gains and also the economic warning signs that are holding things back. We'll look at the specific stocks that really tell the story of the day, check out 3 different ways to think about investing right now, and wrap it all up with a final market checkpoint. So, the most important idea to get your head around today is that this wasn't one market moving in one direction. Not at all. It was really two completely different stories happening at the same time. A battle between the incredible promise of future tech and the kind of shaky reality of the economy right now. On one side, you had this absolute explosion in AI kicked into high gear by a massive deal between Amazon and OpenAI. That was your rocket fuel. But on the other side, it was like the economy was hitting the brakes. We got some new data showing the manufacturing sector is getting weaker, and people are still worried about what the Federal Reserve is going to do with interest rates. That was a major drag on almost everything else. All right, let's start with the good stuff, the real powerhouse of the day, that AI engine. And I'm not talking about a little push. This was like a hurricane force wind that just lifted a few key stocks to a whole new level. The headline that just completely took over the day was this number, $38 billion. That's the size of a huge 7-year cloud computing deal between Amazon's Web Services, AWS, and the AI pioneers at OpenAI. This single deal was pretty much the fuel for the entire tech rally. But this deal, it's so much bigger than just Amazon and OpenAI. It's basically a giant flashing sign that the AI spending spree is not only continuing, it's actually speeding up. AWS is going to provide all the horsepower OpenAI needs using hundreds of thousands of powerful GPUs from NVIDIA. It really locks in the idea that these guys are the ones building the foundation of our AI future. Okay, so while that AI engine was absolutely screaming, the road it was on, well, it started to look pretty shaky. All that excitement in tech just couldn't completely hide the worries that are bubbling up from the rest of the economy. The big warning sign really came from the factory floor. The ISM Manufacturing Index, you can think of it like a monthly health check for American factories, came in at 48.7. Now, anything below 50 means things are shrinking, not growing. And this was the 8th month in a row of shrinkage. It's a pretty clear signal that the non-tech parts of the economy are really starting to struggle. And this chart, wow, this really paints the picture, doesn't it? This is the day's biggest problem right here. Even though the S&P 500 index itself was up, a massive 80% of the stocks inside it actually went down. This is what we call narrow market breadth, and it means a tiny group of giant stocks are doing all the heavy lifting, hiding the fact that most of the market is weak. And this massive divide between the handful of winners and, well, pretty much everyone else, you could see it perfectly in the individual stocks. Let's take a look at 5 companies that really tell the whole story of the day. We're going to look at Amazon, of course, the big winner. Then you've got Palantir and NVIDIA, who are kind of riding that same AI wave. And then a totally different story with Kimberly-Clark, which had a terrible, terrible day. Oh, and Tesla got in on the action too, catching a nice updraft. Amazon was without a doubt the king of the day. It jumped over 4%, which is huge for a company that big. The OpenAI deal wasn't just another contract. It was this massive vote of confidence that AWS is going to be the bedrock for the next generation of AI, and investors absolutely loved it. This good news just spread like wildfire through the whole AI world. NVIDIA, whose chips are basically the engine for all of this, saw its stock rise because the Amazon deal just confirms the insane demand is going to continue. Then, after the market closed, the AI software company Palantir reported amazing earnings. Its commercial business more than doubled. It just goes to show the AI boom is real for both the hardware and the software guys. And now for a complete 180. We're talking about Kimberly-Clark, a company that makes stuff you use every day, like tissues and paper towels. It just got crushed. The stock fell an unbelievable 14.6% after it announced a nearly $49 billion deal to buy Kenvue, the company that makes Tylenol. Investors absolutely hated it, giving the stock its worst day in almost 40 years. Okay, so you've got this insane tug of war going on. The AI boom on one side, a shaky economy on the other. So what's an investor supposed to do with all this? Well, we can break it down into 3 different ways of thinking about it. All right, first up, you've got the AI maximizer. This person says, this trend has legs. I'm sticking with what's working, and doubles down on big tech. Second, there's the fundamentalist. They're thinking one step ahead and saying, wait, all this AI is going to need a ton of electricity. So they invest in things like the power grid. And third, you've got the contrarian, who looks at everyone piling into AI and says, there must be some bargains in the sectors everyone's ignoring right now. So, this is a really good time to kind of pause and ask yourself, which one of these sounds most like me? Are you riding the AI wave? Are you looking for the less obvious foundational plays? Or are you betting that the rest of the market is about to play catch-up? Okay, let's pull all these threads together. Time for our final checkpoint. What does this crazy divided market really mean? And what are the big things we need to keep an eye on? You know, the best way I can think to describe today is to imagine a brand new supercar. The engine is pure next level AI, and it is moving incredibly fast. But it's flying down this old, crumbling one-lane highway. The power is undeniable, but so is the danger. So you can look at this in 2 totally different ways. The glass half full take is that this is the real deal. It's the beginning of a huge, long-term investment boom that's backed by real profits. The glass half empty take is that this is a classic melt-up, that last crazy surge before a big, painful drop. So going forward, there are really 2 big dangers to keep on your radar. The first is an internal risk that all this excitement around tech just collapses under its own weight. The second is an external one, that the Federal Reserve makes a mistake and keeps interest rates too high for too long, accidentally killing off any chance of a recovery for the rest of the economy. And that leaves us with the billion-dollar question, or I guess a $38 billion question today. Is this AI supercar powerful enough to eventually build a wider, stronger road for the entire economy to drive on? Or is it just speeding towards an inevitable crash? Thanks for joining us for The Explainer.